The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 3rd magnificent Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with tools, tools that just simply empower human potential, because living up to our potential, that's just something that, in my opinion, we must master each and every day. So let's begin with an empowering belief or two. I love this one. I know you will as well. Goes like this: live life fully. Live life fully, folks, where you are while you're here. Sorry about that. Experience everything. Take care of yourself and your friends. I say have fun, be crazy, be weird. Go out and screw up. You're going to anyway, so you might as well enjoy that process. But take the opportunity to learn from your mistakes. Find the cause of your problem and just simply eliminate it. Don't try to be perfect. Just be an extraordinary example of being human. And then this one here, folks, life. Life is a mirror, and life will reflect back to us that which we think. My favorite expression about mirrors is this: turn your mirrors into windows. It means look in the mirror. See the person you want to become. I say become because you are always improving, improving each and every day. And then take massive action and jump through that mirror. Turn that mirror into a window, folks. Let's go check out the mirrors in the marketplace. Right now we've got the Dow is up 71 points. S&P is up 2. Composite down $4. Russell 2000 up $1.80 out here. Let's start off by taking a look at the S&P 500. Right now, trading at 1632.96. On Friday, a big close downward. As we take a look at that, also broke a little hammer candle out here, which was from May 24th out there. Now, as we take a look at the S&P 500, if you're watching us on Tiger TV, thank you so much for doing that. Maybe you're listening on the radio or your mobile device at tfnn.mobi. Remember, you can always catch the live stream of this show just by going to the homepage of tfnn.com. Over on the right-hand side, you'll see the button with 3 smartphones. Click on that. You'll see this show streaming live to your device. This show will also be recorded. It's on Channel 10 on our archives. And you'll see my screen. What you see on my screen here is the chart for the S&P 500. And you'll see some little green boxes. Each of those green boxes actually represent the VIX index when we've had a increase from a prior session of more than 10% out there. Just could be 10.01. So I just look at all of those instances out here. Now, when you get that, there's a 60% chance that you're going to see a close higher the following trading session. So with the market moving down like it did on Friday, with some vengeance, with some conviction behind it, if you also were paying attention to the VIX. So I use the VIX in a number of different ways. One, to take a look at changes, bearish trends, or when you see the VIX trading above the 50-day exponential moving average. It most certainly is doing that. When you also see a increase from a prior trading session of more than 10%, you can expect a one-day reversal. How significant? Well, that's a different thing. If we take a look at this here, let's come back to the last time that we saw, just as an example here. The last time that we saw a VIX increase of more than 10%, well, that happened to be on April the 15th. That was one of the, I think that might have been the third largest going back to 1987 or so. I forget how far back my data goes. It's quite a way, 16, 17 years. And as we take a look at this, that was a 43% increase. That's 0.43 on my charting system because, just have multiplied it times 100 in order to get 43%. So 0.43. Now, we saw the market come crashing down on April 15th. It closed out at 1552. The next trading session, it closed up. Take a look at this trading session here on April the, April the 3rd. April the 3rd, I just have to move this over a tad. I'm not going to. But April the 3rd, we can see the market move down. The S&P closed out at 1553. Very next trading session closed at 1559 out there. Let's take a look at the one before that. Well, if we take a look at March 21st out here, March 21st, you see a red bar. It was a 10% increase from the prior day. Inside the VIX, what happened on the very next trading session? A close higher out here. Let's take a look at the trading session from March the 18th. March 18th, well, you didn't get a higher close. In fact, on March 19th, you got a slightly lower close out there. But there's one. We've just taken a look at three. There's 1 out of 3 out of 4. There, you would say that's a 75%. Well, let's come back and take a look at the February 25th time frame. February 25th, the market moves down with a vengeance, gets down to closes at 1487. What happens to the S&P the next day? Closes a bit higher out here. So now we're what? We are 4 out of 5. We're going to go 4 out of 6 here right now because on February 20th, you had to move down. It was about, let me see, what is that? 19% jump in the VIX. A little bit higher, a little bit lower close the following trading session before you saw a bounce out here. Take a look at, so now you're 4 out of 6. Let's go for 5 out of 7 here. That would be the trading session of February 4th. Comes down, you've got a 13% increase from the prior day. Inside the VIX, a higher close. So we're 5 out of 7. Let's come and take a look here. We can go 6 out of 8, it looks like here. Not a bad batting average, huh? Take a look at that batting average. That would be December 28th. That would be that fiscal cliff stuff. As you had the S&P moving down, that made a 16% change from the prior session out there. Gets down and closes at 1402. Next day, next day you had a bullish engulfing candle back inside that rising price channel. So what I think we're at? We've only had 1, 2, 3, 4, 5, 6, 7, 8. So we've got 8, so we were 6 out of 8, I suppose, and we can go for 7 out of 9 here, it looks like, because we would look at the trading session from December 19th. December 19th, you have a lower close, next session up. So 7 out of 9 coming off of the lows from November 16th out there. What do you think the chances are that we might see a higher close today out here? Now, folks, I wrote this up in my newsletter for my clients on Saturday, sent it out early. And said, here's the deal. Here's just simply the way that now, does that change the trend in the marketplace? Does that change what Friday's demolition did out here? Does that change this key reversal session from the May 22nd area? Key reversal, bearish engulfing, bear sash type candle that is out there. No, we had key reversals on the weekly as well. So the bears still have a charge of the ball out here. What we should expect is what it is that we're seeing unfold today inside the marketplace. I expect a higher close. How much higher? That I don't know. I just know that probability just simply favors that we are going to see a higher close, and especially when you take a look at it just simply coming off of the November 16th low. But that's not really representative of the, 230, 40 instances of the VIX where you have increases of over 10% out there. I always like to identify probabilities in the market. That's why I like to master probability. That is what it's all about. So that's on your S&P 500. That's on what we saw inside the VIX. Speaking of the VIX, let's go take a look at the VIX and see what it is doing here. So as we pull this out, we can see that the blue line on my chart, the upper portion of the screen here, that is the VIX index. That blue line is the 50-day exponential moving average. The chart on the bottom half of the screen, that's your S&P 500. And what this shows you, each of those yellow boxes are when the VIX gets above the 50-day exponential moving average. Each of those instances have led to either a correction, an A to B equals CD down, a move lower, however it is that you want to pay attention to it. Well, we're well above the 50-day exponential moving average. In fact, the VIX here, Friday's session, Friday's push higher, that just simply got it well above the 200-day exponential moving average, and that's what we're seeing here is a correction. Now, it's on the shorter-term basis because that is the daily charts out here, but that's where we're at in the VIX with it trading right now at 1620 out there. If we go let's look at some of the other indexes here as well. Let's take a look here at the New York Stock Exchange. So on the New York Stock Exchange, as we pull this back, this one here, which is the wider swath, the wider breadth of the marketplace, well, you got a key reversal session out here. That was on May 22nd. That was when the Bulls officially fumbled the ball and the Bears took over. We had an island reversal session out here. That's still active. That was your May 28th session. You had a gap up from the prior day on May 24th. You had a gap down on May 29th. That set up the island. The boat went out there to try to rescue passengers. Looks like it got stuck in maybe some light waters out here. That was on May 3rd out there. So you got a key reversal day. You got an island reversal. You had a lower close with conviction on Friday's session. That is signaling a change in trend to me inside the breadth of the market, the wider swath. That's in the New York Stock Exchange. That is what we are seeing take place out here. We're in that 6-month seasonal cycle. I'll go back to the S&P 500. I'll give you that number again. Let me pull that up on the screen here. Give me a moment just to add this study to the screen. And, so where I expect that we will see the S&P 500 get down to at least is going to be the price point of 1470. 1470. Now, did I say 1470? 1470 is where I suspect we will see the S&P 500 pull back to. And what a nice buying opportunity that would be out there. That's at least at a minimum what my expectation is during this next, quite frankly, I expect it during the next 5 to 6 weeks in the marketplace. So I expect to see a move lower coming into the July 4th holiday. That's the time which I believe we want to be buyers of the market. But we'll just simply, we just got into June, so why am I talking about July? Well, there's reasons. If you'd like to know those reasons, go check out my newsletter service, Mastering Probability. They're all laid out there for you. You can check that out. 30 days, unconditional money-back guarantee. And I did mention during the last hour, I don't know, I haven't checked out the homepage at TFNN.com, but you should, because that Tiger Dollar promotion was still out there. I think our programming staff hadn't gotten into the office yet to change that. So I would get out there. Remember, you're getting 20% bonus on any purchases of yours. And if it's over $500, you'll get another 5% on your behalf contributed to the one fund. If it's over $1,000, that's another 10%, or that's 10% that'll be contributed on your behalf out there. So there is no time to procrastinate. Go ahead and do that now. And if you didn't get a chance yet, folks, go check out. You should do this certainly in the evenings or during the weekends or right now. But go check out The Art of Timing the Trade charts out there. It is a software package that David White and Tom O'Brien put together, fashioned off of the art of timing the trade, your ultimate trading mastery system out there. So it is an incredible software package. You can, I believe that I don't recall, I think they still have the special on that. It's $59 a month out there. You want to test that out. That also has a 30-day unconditional money-back guarantee. And if you're trying to understand swing points, what the volume is at swing points, how to identify swing points, well, that does it. If you'd like to understand where Gartley buy, sell, butterfly patterns are setting up, well, that's a scanner. It does that for you as well. And if you'd really like to understand the energy behind a move, behind the move on A to B or a CD, or you're taking a look at legs, you're taking a look at maybe selling a swing point test out there, well, that's where that power law vector indicator, and there's no other place to get it than on the Art of Timing the Trade charts out there. So go check that out on the homepage of TFNN.com as well. When we get back from this first break that we're going to go into, we'll take a look at the currency market, see what's going on there. I want to take a look. We did see here, Intel is up 4.5% out there. INTC is the ticker symbol. So we're going to take a look at Intel when we get back. That's up $1.13 right now. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You'll like this here. You got the Dow's up 104 points. S&P is up 6. NASDAQ is up 6 as well. Russell 2000 up 7 points right now. On the New York Stock Exchange, the net advancers minus decliners, you want to know how many it is? 53. 53 net advancing issues with the market being up like this. Broad participation? No, I don't think so. Certainly not as of this stage here. Now, let's go take a look at what is participating, and that is Intel, INTC. That is having a nice morning with volume behind the move out here. Let me see if I can find any news out here on this move behind Intel. Let's see. Intel, nothing that I see here at the moment that jumps out at me. What it has done here this morning, so let me get rid of the lines. I was doing this during the break. I'll just do this with you here. So let's take a look at Intel. Number one, we can see here so far, we've been trading for just under an hour, just shy of an hour. You've got 29 million shares inside it already. That's taking out a swing point area that had 31 million shares on May 9th. So you've got nice volume, 31 million, and again, that's going against 29 already in just an hour of trading. So you've got some conviction behind this move. So that's first. Number two, let's go take a look at the retracements coming off of the swing point. So, it's one of the easy things to do. Most charting software packages have a retracement expansion ruler. In this case here, we're going to take a look at Intel. We've got the daily chart on my screen. If you take a look at the high of May 3rd, that was 29.27. 29.38 was the following high. That's that big bearish engulfing candle. So 29, let me see, 29. Hold on, let me make sure I get the right thing here. 29.27 and 29.27, 29.20. They're both 29.27. What the heck am I talking about? So let's just take the top of the candle and go all the way down to the low when you had the Intel down in that overbought territory, November 21st, 2012. So what we can see here by just taking a look at this is that the 0.618 retracement is actually $25.43. Now, what Intel has done this morning has gotten up to a high of $25.45. It's trading at $25.37 right now. Now, that doesn't mean you go ahead and sell this one. This is not a 0.618 retracement level that you would sell. Absolutely not. Why? Well, number one, yes, it absolutely has gotten into the overbought territory, but you just gapped up into it with volume out here. And you certainly have this would be a Gartley pattern. I can draw the Gartley pattern in. So let's go ahead and do that. We'll draw it in as such. If you had the art of timing the trade charts out there, it would also show up here. So here's your Gartley buy pattern, and you can see that this is the D point where it completed today. That's your 0.618 Gartley sell. It has an expansion of 1.81 off of your C to D, your B to C swing point. And that was the high of January 17, 2306, down to the low that was put in on February 21st out of 2012 out there. But you've gapped up into a D point. You've gapped up because in order to have a Gartley pattern, you've got an A to B equals CD pattern. That's what we have here. Your A point was that swing point low from November 21st, 1923. Your B point was that move higher on January 17, 2306. A 0.786 retracement was what took you down to that February 21st area. So A to B equals CD. That completed here this morning. Maybe it's more than 1-to-1. In fact, let's go take a look and see what it is out here. And it was a confirmed A to B equals CD as well. So not unexpected. He had the 1-to-1 move. So this morning here it's creating that 1 to 1.272 move. But you've gapped up into it with volume. What that says to me, it's more likely the 0.786 Gartley sell pattern that Intel will go ahead and complete. That'll take you up into a level of about $27.11. But what you know is right now it's time to be on the lookout. You're going to be on the lookout because you're expecting the market to turn. You're waiting for a reversal signal. Intel isn't something that I would be shorting, no. You've got, a couple nice volume days out here that it's going to, today being one of them, that is going to have to absolutely break out from. But you do have a 0.618 Gartley sell inside Intel, but it's coming in there with volume. And so, anyways, that is what's going on there. Let's go take a look at the currency market here. We do have some moves going on inside the currency market. Let's start. You got King Dollar is pulling back. In fact, let's go take a look at the U.S. dollar index chart here first. Here's the weekly chart on the U.S. dollar index. Had a call last week on Friday, and the number that I gave was so long as the U.S. dollar index held the open of the week of May 17th, that was level of 83.26. Then this certainly wasn't any kind of bearishness that we were looking at. The actual close was 83.30. On Friday. So it finished out the week just slightly above. We can see that now. This is a weekly chart that we're looking at here. So we can see that area here is being penetrated. The same numbers will work this week as well. U.S. dollar index is pulling back, and that's going to be because of the Queen and the other currency pairs that we'll go check out as soon as we get back. 877-927-6648. Be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now, the Dow is up 58. The S&P is flat. The composite's off 9. Russell 2000 up 250. And remember, I was talking about the net declining issues on the New York Stock Exchange. Well, now we're minus 505 out here. And the New York Stock Exchange composite is up 3 points out there. So certainly the weighted equities here being pushed in this market. So let's go out to Denver to Mark. Mark, thanks for calling. Thanks for holding. How are you this morning?
Good. How are you today?
I'm doing great. Thanks for calling. Thanks for asking. Did you have a nice weekend?
I did. Did you?
I did, absolutely. Never enough weekend, though, in my weekend. I did like – it was nice with last week just being a 4-day trading session. I would like that. That wouldn't be too bad. What do you think? That
works.
Yeah, absolutely. You wanted to look at DXJ.
Actually, just real quick, what do you think is a better vehicle, the DXJ or the EWJ? The EWJ has a lot more trades a lot more volume, so maybe we should look at that instead. But either one.
EWJ. Okay, yeah, absolutely. We can take a look at that now. I don't trade either of those, and so on the EWJ, is that have you taken a look at to see what holdings are inside that? I mean, does that mimic the Nikkei itself?
I think
do you know?
I think that's pretty close. Let me look and see. I think it's got. I'm just going to check that.
That's the only thing, when you trade these ETFs it's really just trying to understand what is contained inside it. From a weighting standpoint.
It's the big industrials in Japan, like Toad. It's 5.2% Toyota, 2.8% Mitsubishi, 2.4% Honda,
Okay.
2% Sumitomo. It's got some Canon, Takeda, SoftBank. So those are the kind of some of the top 10 holdings.
Okay. Excellent. Okay. And are you in it? Are you thinking of getting in it? What? Tell me what.
It's had a huge retracement, and
Yes.
I'm looking for potential entry. Looking to see if it holds. There's a high volume day on April 2nd. It had 72 million. It's coming down there. It's coming down pretty heavy, so I'm looking to see if it stops in that area. But I don't know what your thoughts are.
Well, let's do this first here, Mark. Let's go over and actually take a look at the Nikkei. And the Nikkei, I wish I had the volume on this, but regardless of that, we can still take a look at it. So as we take a look at the Nikkei, what a huge run this thing had from the lows of November 13th, when it was down at 86.19, all the way up to 15.942. So it's not a complete 100% move, but pretty darn close out there. And then it has had, folks, you talk about a wide-ranging bar to the downside, a key reversal day, bearish engulfing, the whole thing, that whole kit and caboodle. That was on the candle on May 23rd. And that signaled at a minimum, Mark, in my opinion, the minimum of a move down to that 0.382 level, which is 13,145. In 1, 2, 3, 4, 5, 6, 7, 8 trading sessions, this thing is off 17% from its highs. Are you looking at that EWJ as a longer-term trade?
Yeah.
Okay. So then, with a longer-term trade, let's assume that let's start off with this hypothesis. Number one, we know the A to B leg on the Nikkei is huge because that A to B leg is the one that I gave you, folks, 86.19 to 15.942. So that's an actual, an absolute huge move out here. What I would wait for before I would get into it, and we'll go back over to the EWJ here. So the first thing is, before we switch over to the charts here, if 13,145 doesn't hold, now I know you're looking at April the 2nd, and that's a good spot or area to look. Inside the Nikkei, it's really that April 4th gap, I think, that you would be looking at, because that has not been tested, and it's really not that far below the 0.382 level, which is 13,145, and the low of that gap, which is April 5th, is 12,831. That's really not, dollar-wise, that's not that big of a move. And I suspect that that's an area where you're going to first get your first piece of information. What I would wait at least for is some type of bullish reversal candle before I would step in, to the EWJ out here, or DXJ if that tracks the same thing, whatever. I would at least wait for some type of indication that you've got a bullish reversal signal, because there's really nothing wrong, other than the volume that's come out and how it's come out. There's nothing wrong with a pullback into the 11,416 area inside the Nikkei. But if we go over now, we take a look at the EWJ. Let me just find out where I put that chart here. Give me a moment to pull that back up. Okay, so we take a look. Now let's take a look at the retracements also, coming off of, in this case here, the November 14th low, all the way up to the high that was put in on May 22nd. And, on this one here, so here's the reason why you want to also take a look at the Nikkei. If this is really tracking the Nikkei, and I don't know that it is, but let's assume that, that you're going to need to see a reversal in the Nikkei before you're going to see a change in the EWJ. I mean, would that be a fairly, yeah. Okay, so here in the EWJ, we can see that it's already below the 0.382 retracement level, which, lines up. The 0.618 is 1016. You were using April the 2nd as your bar, and that 1016 is going to be below that area. But I would really be trying to make my trading decision on this off of the Nikkei. And if we take a look at this chart, if you were to use that relative strength, relative weakness indicator, we can see that it's truly in the oversold territory. But I think it's going to be the Nikkei that ends up driving this vehicle, and that's where I would make that's how I would make my trading decision, is based on what goes on inside the Nikkei. I wait for the bulls to truly show up, and then take your first stab at it.
Sounds good.
Okay.
All right. Thanks for your help.
Hey, you bet. Thanks so much for calling. Have a great day out there.
Thanks.
All righty. So now we're down to 800 net declining issues inside the New York Stock Exchange out there. So it's another thing to, when you're taking a look at price moves out there. in the marketplace and trying to figure out what's real or what's not real out there. We were looking at the Dow being up 100 points, and the net declining and net advancing issues inside the New York Stock Exchange were like 50. That was saying, oh, hold on a minute here. Sorry, Charlie. That doesn't make a whole lot of sense out there. So, right now you're down to about 870. That's, the broad market out there. So let's take a look here at, let's go see what else we've got. I said currencies. We take a look at currencies. So let's take a look at the currency market here. I believe we were taking a look at we're going to start with the euro first. So if we take a look at the euro, not really providing us with a ton of information here on the daily chart, other than if we take a look at off of the swing point high from May 1st down to the low on the May 7th out there, we can see that it's already done the 0.618 retracement. No pattern, no real A to B equals CD. I guess we could probably, let's see if this one would create the Gartley. It's made an A to B equals CD. So if we do take a look at that, I probably can draw this pattern in here for you. It's made a Gartley sell pattern out here. It most certainly did. So you had that 0.618 Gartley sell pattern. That completed here on the session of May 30th. But price is really traveling with inside that bar, and it was a wide-ranging bar coming into the session on May 30th out here. So as long as you trade inside this bar here, it's not giving you any kind of reversal to the downside. We know that support inside the euro-US dollar is going to be down at these swing points on March the 27th, right around 1.274 level. That's the area that is held as support. We'll see if that level will hold again. So on the daily chart, you've got a Gartley sell, but what I don't like is the mere fact that you had this wide-ranging bar coming up into it, and you haven't really even tested the low of that. And the low of that would be right around 1.29324 out here. So the euro could go in either direction, in my opinion. Let's go take a look at the 30-minute chart. Let's see if the 30-minute chart is telling us anything. The 30-minute chart, we've got the 0.618 Gartley sell already drawn on that. And if we take a look at the euro, we see that on the EKG, on the 30-minute chart, it moved down into the oversold territory. We saw a big bounce. That big bounce, we saw a spike inside the markets, inside our U.S. markets out here. So we saw that bounce out there. But still nothing. It's just been consolidating here ever since the reversal pattern inside about 8 o'clock in the morning on May the 30th out here. So it's really good. What the euro is going to have to do on a 30-minute chart is bust through these lows being 1.2940. That's at 8 o'clock time frame, 8 o'clock bar on May the 30th before it wants to take its next leg. What we can see on the 30-minute chart really just been consolidating ever since that time period. So not a ton of information on the queen and what it wants to do. Its next move up would be into the 1.314 level, and its next move down to about 1.279. So that's on the euro. Market's calling about the EWJ or the Nikkei. Let's go take a look at the yen and see what the yen U.S. dollar currency pair is doing out here. So here's a U.S. dollar, Japanese yen. Here's the monthly chart, and it is pretty wild, and it's why you want to be able to use a number of different tools if you can. If you take a look at the tools in your tool chest, here's your descending trend line. This is the monthly chart. This comes all the way back into the June time frame. August of 1998. So pretty long-term chart pattern out here. And just take a look at how the yen, as it made its move off of the lows back in October of 2011, out at 75.55, how you had that straight line, and I mean a straight line move. But look what held it in check. What held it in check out here is the descending price channel out here as it got into the 103 level. No bearish candle. We'll see if that actually starts here this month. But on the monthly chart, you can see that you can identify areas of overhead resistance. And maybe you don't use this, but other traders, I can guarantee you, they use it. And so those folks that had a long position in the U.S. dollar, Japanese yen, they would know to start being careful, tighten up your stops, and so forth out there. So that was on the monthly chart. Let's go take a look at a daily chart. Then we'll take a look at an intraday chart. See if we can see what its next move is out here. So on the come on, baby. So on the daily chart here, we can see that this is moving back into the top of its last time that it was consolidating. You had the U.S. dollar, Japanese yen consolidating between the April 5th time period and then finally broke out of that level just about 33, 34 days later on May the 9th out there. That area is now being tested. Looks like we've got an A to B equals CD down inside the U.S. dollar, Japanese yen. Let's see if that pattern here has completed. That's going to be completing today. 99.45 is that level. So far you've been down to 99.58. If we take a look at that retracement, just curious, this is the daily chart that we are looking at here. Your B to C retracement was a 0.618 retracement. So we'll see if this area is going to hold. Let's take a look at whether or not this is setting up a Gartley buy pattern out here. So we'll come off of the swing point low from April 30th. That level is 96.99, and we'll go all the way up to the high from May 22nd. You can see the 0.618 level is, so it is making a Gartley buy pattern, but what you would really do here, again, I think that it's always best to be patient and wait for a signal. And let's take a look at a couple of different. So here's your it wasn't the actual swing point I was taking. My apology. I was coming off of this swing point low here. But what we are going to do, didn't mean to grab that tool. What we are going to do is we're going to take a look at retracement, see if we can identify any areas where things are lining up, where we see multiple retracements. So if we take a look at the U.S. dollar, Japanese yen, it's actually making a perfect. Take a look at these Fibonacci numbers and how these are working out here on the screen. You've got a 0.618 retracement off of the high here. So your high, your B to C move, that was the B to C move that was coming off the high on May 22nd. That was your A point. Your B point was down here on May 24th. That low is 100.65. You can see that move up as a 0.618 retracement. Now we're coming off of our most recent swing point low, which I said again was at April 30th level, 96.99. That happens to be price where we're at right now is a 0.618 retracement. And you've got a 1.618 expansion. That expansion is your B to C expansion. That's a low of 100.65 from May 24th all the way up to the high that was put in on May 29th out at 102.51 out there. And so this should be an area where you would find some strong support out here. If you don't, what does that tell you? I mean, just simply using the Fibonacci expansion and contraction numbers alone should help you to identify that move overall. And so if this area fails, that says it's going to move down to the next level. Next level would be 0.786. Now, what I want to do here, I'm going to erase those patterns. I'm going to go ahead and get rid of these boxes. They just simply are cluttering my screen right now. I'm not going to get rid of those primary trading ranges. But what we are going to do is we're going to take a look and see if we can identify maybe a couple areas where we see some Fibonacci numbers coming together all at the same time. So I'm going to go back to the next swing point low out here, which is going to be the April 2nd time frame. That happens to coincide with what Mark was identifying inside the EWJ out there. I don't know how coincidental that is. There are no coincidences in life. So let's come off of that swing point low inside the Japanese yen. Let's go all the way up to the high on May 22nd. Let's go ahead and make that. And so what we can see here is really coming in off of that swing point low is a dead cat bounce, is a 0.382 level. So you've got a 0.382 retracement, a 1.618 expansion, a 0.618 retracement coming off of that area here from May 30th. And just out of curiosity, let's come off of this swing point as well, which is the area from April 16th out there, and go up to that high. And let's see, what else do we have? Well, that one really doesn't line up with us, but this is an area of strong support inside the U.S. dollar, Japanese yen. And if this fails, we'll probably see a move all the way back down to $96.82. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's up 60 points right now. Let's see if there's anything red inside the Dow here. It's the only thing that is green. Oh, yeah, a number of things that are red. It's about looks like maybe 60-40 as far as green versus red. The big move down inside the Dow here this morning is J.P. Morgan Chase. That's up 69 cents. The Travelers off about 26, 27. United Technologies, UTX are off 25. Bank of America off a quarter. 3M down about 22 cents. Merck & Company is the leader of the upside, up $2.20. Boeing up $1.30. IBM up $1. Intel up 93 cents right now. Walmart is up 74 cents. McDonald's up 58. That is the movers inside there. If we go over and take a look at the 30-minute chart of the S&P futures out here, we can see that the bulls really trying to defend their territory. Now, we'll go, and what I mean by that, let me pull that out. Then we'll go take a look at the Nasdaq chart. So the ES Mini here is very close to have, or maybe it has, gone ahead and completed its A to B equals CD down. That first A to B equals CD down would take you to 1621.50. We saw a little low here come in at 1623.25 during this session here from 10:30 to 11. That's your A to B equals CD. That's the ultimate of any Gartley sell pattern. That first Gartley sell pattern inside the ES Mini coming off of the high at 11 o'clock in the morning on May 22nd out at 1685-ish or so. Your B point down around the price level of right around 1634. That was you can take if you're watching this on Tiger TV. It's really going to be. Let me pull this back here. It's this first light blue pattern out here. So your A point, your B point down here at that Morning Star. Your C point is really what ends up being the Gartley sell area. So a Gartley, what's nice about a Gartley pattern is it can actually turn into a new A to B equals CD. In this case here, it was an A to B equals CD down. So that, in essence, has come very close to completing out here your one-to-one move on that. And we can see that this area here is still being defended by the bulls. They were out at the open here last night as the ES Mini began trading out here. We took a look at the Morning Star pattern that was created at 4:30 this morning, or the support, I should say, is at the low of 4:30. And no other, you got a little piercing candle, I suppose, right here. That was a last session coming in at 10:30. So this area here is truly being defended. Now let's go take a look at the NASDAQ futures, the NQ, and see, because they have actually completed a pattern out here, I'm noticing. And the cool thing about your A to B equals CD patterns, you can draw these in advance. If we take a look at the Gartley sell out here, just like we saw inside the ES Mini, well, if I take a look at another pattern here, an A to B equals CD down, this A to B equals CD down coming off of the 10:30 session on May 28th, we can see that pattern here was completed as we were doing this hour here, 10:30 to 11. That number was 29.66.50 out here. Been down to a low of 29.64. Now, no bulls. Would you buy this? No, you wouldn't buy this. You would wait for some type of bullish configuration before trying to step in and play some type of intraday bounce out here. But if you do see that, if you do see a bullish candle, well, that would be your signal that you could take a trade on that. We are not seeing that at the moment here in the NASDAQ futures. What we do see is that it is moving into an oversold territory out there. So that's what's going on in the markets, folks, right now. Net declining issues at about 800 out here, even though the New York Stock Exchange is up 2 points out there. So stay tuned. Basil Chapman is up next. It is Monday. That means Larry Pesavento follows Basil. Then we've got Daryl Martin from 1 to 2, David White 2 to 3, and the Tom O'Brien Show from 4 to 6. Have a great Tuesday, folks. I'll look forward to seeing you tomorrow morning. Take care.